Okay, welcome everybody to the second short video, part of learning module number 2. As I mentioned in the first video, there's a lot of material in this learning module, so we want to break it up into bite-sized chunks so it's not too overwhelming. So in this short video, we're going to be going over the first sheet of a spreadsheet that makes up the pro forma that Hank was talking about earlier. So Hank, please take it away.
So we talked about costs. So the first thing we're going to look at is labor costs. It's kind of the easiest one to get your arms around. And I definitely want to point out that this is an example. The spreadsheet works. There's formulas built into the spreadsheet, but it's not your business. It's an example business using real numbers, but it's still an example business. This particular one is using labor rates from local 290 as of April 1st, 2021. And journeyman base pay is 48.93. Now, keep this in mind that if you're estimating a labor rate for a foreman, an apprentice, first year apprentice, third year apprentice, this is all going to change somewhat. And so this is just picking one example, journeyman base pay, 48.93, and a union benefit package of 34.14. So we add those two together and it's $83. Everybody understands that. You just add those two together and that has to be accounted for. But now let's look at some other things that have to be accounted for. You have to account for workers' compensation because that's an insurance you buy in many places through the state. You're buying workers' compensation insurance. And so if you look at this, and let me preface that all the gray boxes are formulas. This particular one, if you go to the top here, it says 5.32%. Now, let me qualify this by saying every state's different, every company's different, so don't take this as gospel that your workers' compensation insurance is 5.32%, because it may not be, it may change. And depending on the year, it goes up and it goes down. So just kind of keep in mind, but when you have a spreadsheet, you want to take and start to calculate this. And this says it turns out to be $2.60 because it's multiplying it times the journeyman's base pay, this one right here.
Just another point, workers' compensation and unemployment insurance and FICA, those aren't optional things that you can just not buy if you're trying to save costs. These are things that are actually mandated by law that you buy and pay into. So you can't exactly cut costs on things like this. And that's why it's so important to understand what all of your payroll costs are going to include, because you don't have an option not to pay these things.
Let me add even more to that. Workers' compensation, if you have a poor track record of accidents, injuries, people being out of work, this number is going to go up, and it's going to go up significantly. If you are safe, you don't have a lot of injuries, and people don't go out on injury claims, then it'll go down. So this number is going to vary. What typically happens if you're starting a new business, the state may assign some variables to you because they don't have a track record. The same thing applies to unemployment insurance. If you go through a downturn and you have a lot of people getting laid off and filing unemployment insurance claims, well, then guess what? Your insurance is going to go up. Those are things that you got to get with your accountants on. You got to figure out really what that cost is. But the spreadsheet, if you use this spreadsheet and you get the real numbers, it will work because it's a real case. And this here, I've got it in at 5%. FICA is Social Security. Now, this is a standard federal rate, 0.765, so it's 7.65%. Again, has to be paid. You can't skip this. This is not a cost that you can go, I'm not going to pay Social Security. That doesn't work that way. Good way to get yourself in a lot of trouble with the federal government. And finally, general liability insurance. And again, this is going to vary from company to company, but you need to account for that. So if you do that, you come up with a total of just short of $10, which is this number here. That's all the payroll taxes and insurance. So that takes our $83. Now we're up to $92.84. So right out of the gate, we've added almost $10 to what should have been, quote unquote, well, it's the benefit package that a tradesman gets. And then we're already up to $92.84. But let's continue because we're not done on adding in costs. So now, the company that I ran, we had at one time 120 field people, maybe 25 office people. We could account for everything up to a point. Then we had stuff left over that we weren't accounting for. We had a sheet metal shop, so it had fabrication costs. We had inventory. So what we did is we said, okay, we can account for all these overhead costs, but there's some stuff we're just not accounting for in our labor rate. So we're going to develop a field burden. We're going to say, in this particular case, $5.10 an hour of a field burden. So that would get added in as well. Now, do you have to do it that way? No, you don't have to do it that way. That's just the way we did it. The reason being is we wanted everything tied to our field labor rates as much as we could do that, so that if our labor went up, if we were busy, we covered all our overhead costs as well as maybe a little extra if we needed it. But you don't have to do it that way. And we'll talk about other ways to do it, but this is the way we did it. And many mechanicals will do it this way, where they'll just come up with a number. Is $5.10 right? It was right for our business. It may not be right for your business. So it's another one of those cases where if you think about it, you got a big bucket. You got all your costs in that bucket. You can divvy up a fair amount of those costs directly to your field labor. You may not be able to divvy it all up. And so you're left with this burden rate. In this case, it was $5.10. So now we're up to $97.94. So remember where we started. We started at a journeyman's base pay of $49. We added in the benefit package. We added in all payroll taxes and insurance. We added in a field burden. Now we're up to almost $98 an hour. Now, service vehicle, $7.81. And we're going to show you where we got that number from. That's not a pie in the sky number. And I know what people think. How could a vehicle be almost $8 an hour? Well, you'll see. It can be even higher than that. It could be $10 an hour if you're not diligent on what you're buying for vehicles and how you're managing your fleet of vehicles. The business I ran, we had 50 vehicles in the fleet. And that included service vehicles, construction vehicles, included salespeople's vehicles. So we had a pretty good handle on what vehicles cost. At one time, we bought the vehicles. At other times, we decided to lease the vehicles. And there was some reasoning behind that. But we always tracked all our maintenance costs. And we knew that once a vehicle got over 100,000 miles and got over 4 or 5 years old, that maintenance cost got very expensive. And everybody's philosophy on vehicles, when we talk about it, is a little different. Some people think, I'm going to buy a vehicle and I'm going to run the vehicle until the wheels fall off. Well, we proved when we analyzed it that was costing us a lot more money than actually every 4 years leasing a vehicle. And we just found that we had less headaches, because here's the deal. I'm going to go back to this number again. It's costing you $83 an hour. Your vehicle breaks down, that you've got one of your tradesmen driving, and he sits for 3 hours because the vehicle broke down, transmission problems, brake problems, whatever the case might be. It can get expensive really fast. Or let's say this is a service mechanic and you lose the vehicle for a day. Can you afford to not have 8 hours of revenue from that service mechanic at, pick a number, $150 an hour? It's a lot. So we made a conscious decision to lease the vehicles. We thought it was a better solution for us. I'm not advocating you do that. I'm advocating that you analyze it and make the best decision for you and your business. So we add in the vehicle, and now all of a sudden we're up to $106. Started off at $49 an hour, we're now up to $106 in this example here. Now, some notes here. If you add overtime in, which might be time and a half or double time, depending on what you're doing, that only applies to the base pay. You don't calculate and add that to the benefit. So if you're doing time and a half at 1.5, you've got to add, in essence, 50% to this number, but you don't necessarily add 50% to the union benefit package. But check with your CBA. They'll dictate to you how you have to calculate this. The other thing is this right here. Typically, if you're starting off small business and you've only got 3 guys, 3 plumbers, 3 steam fitters, I don't care how you do it. Because you only have 3 people, you don't know where these guys are working. So consequently, you're going to need to load them up with as much inventory as possible. As you get bigger, then you can get a situation where I've got some mechanics that are in fully furnished trucks with a lot of equipment and inventory, and other people that don't have any truck. Why is that important? Because it's costing you $8 an hour to put somebody in a furnished vehicle, a truck. If it's just construction, per most CBAs, again, check your CBA, they need to be on that job site at 7 o'clock in the morning. Let's just assume you're starting at 7 in the morning. Nobody says you have to give them a vehicle, because giving people vehicles gets expensive. And once you give away vehicles, it's hard to take them back. So that's just kind of a thought from that standpoint. Obviously, some other things here on the bottom I want to point out: crew rate. So if you're doing, as you get bigger and you've got 4, 5, 6 people on a project, doesn't matter if it's a plumbing job or a steam fit, it doesn't matter. You can start to come up with a crew rate. So maybe you've got, well, I got 2 journeymen, I got a foreman, and I got 2 apprentices on the job, or 1 apprentice on a job. Again, you got to look at your percentages that the CBA allows you to do. Now you can come up with a crew rate that's less money. I will tell you, the bigger contractors, this is a science, and they know how to do this really well. But when you're starting off, consequently, you're paying everybody as a journeyman. You don't have apprentices because maybe you don't have enough work to afford an apprentice. And so it becomes a challenge to try to get your rates down, because if you've only got 3 journeymen working for you and they're all driving a truck, then guess what? They're all going to be $106 an hour. If you're competing with somebody who's a big contractor and they've got 100 tradesmen out in the field, those 100 tradesmen might include pre-apprentices, first-year apprentices, third-year apprentices, fifth-year apprentices. They've got guys in vehicles, guys not in vehicles. Their crew rate might be a lot less than $105 an hour. So if you ever wonder, well, how did they get so low? Well, that's how they get so low, is they might have a crew rate that maybe is $80 an hour. It's possible if they've got apprentices working for them on the project and if they've got people without vehicles. So that's how we come up with our trade labor costs. And again, the spreadsheet works. You need to plug in the numbers that apply to your business. And you need to do that with some support, potentially, if you're not strong on accounting, from an accountant, a bookkeeper, a controller, somebody that can work through this and go, yeah, that all kind of makes sense. Here's the numbers, though. It might look a little differently. And so your number here might come out higher than this number, it might come out a little lower than that number. And it will change every single year. So important to understand that. Also important to understand, if you're bidding on work and that job is a 2-year project and you're 4 months from the end of your collective bargaining agreement, you better figure out what labor rate to use, because if you use the current labor rate and the job runs for 2 years and the labor rate's about to change in 3 months and the project doesn't even start for 3 months, this number here, as well as this number here, could be 10% more. And you need to understand that, because you will not be able to go back to the general contractor or owner and go, oh, I didn't realize the project was going to last 2 years. And the next thing you know, you're short. And on a job that has 50,000 hours on it, could add up to a lot of money really fast. So that concludes our trade labor cost.
One thing I want to just re-emphasize here. So we've gone from the journeyman base pay, the amount on the check here of $48.93 down to over $100 an hour on this one sheet. And we don't have anything built in here for profit or margin. These are all costs.
Correct.
So that's something you really have to keep in mind. Like, this is how much somebody's going to cost you to be in the field. You need to be charging more than that if you actually want to make money on the work they're doing in the field.
Again, I'll reiterate this. I said it earlier. You're not in the nonprofit business. It's not a dirty word to say you're making money. All businesses make money, and consequently, you're going to need to make money on top of that $105.75 an hour. And you need to understand it doesn't start with what I sell it for. It starts with where's my cost. And then once I know my cost, then I start to figure out, well, what do I have to sell this for to make money on the job? From that standpoint, it's not about, I used to bring this up all the time when people would say, oh, we should bid this job. And I'd say, first I started saying, well, can we win the job? And they would say, oh, we can win the job. And then I'd have to rephrase it to say, can we win the job and make money on the job? Oh, well, and the joke always was, oh, you want to make money? Why would you want to do that? Again, we're not in the non-charitable or the charitable business. We're here to make money, and it's not a dirty word. And I can't stress that enough. Many people in the contracting world are afraid to tell a customer, well, I make money on this job. Well, no kidding. If you think a hospital doesn't make money, or a commercial developer or a corporate real estate company doesn't make money, you're foolish, because they do.
Great.
We're gonna stop this recording, and we're gonna start a new one on vehicle cost.
We'll see you in a few minutes.
Yes.